right, what is going on, Brad? Man,
What's up, Mike?
I'm super excited for today's Crypto Takeover podcast
Yes.
episode, man. We've got day 3 of our intro crypto boot camp, however you want to say it, man. This
Let's
is
go.
exciting here because if you don't have a
Crypto
plan,
Takeover Boot Camp Day 3.
there we go. He's got it. He's got it. If you don't have a plan when getting into crypto, you either A, are going to lose money or you're not going to make anything because you're going to get in and then you're going to ride some wave and you're going to get to the top and you're going to think it's not the top and then you're going to keep going. So if you don't have these goals set in place when you get in for where to get out, it's not going to go well. Right. And you have to stick to it. So Brad's going to share some valuable information. He's been trading for a very long time, even before crypto. So this applies across markets, not just crypto, right? You want to have an entry and an exit plan when you're trading in general. So we've got the man with the plan here, and he's going to share some valuable information for us. So get something to take notes with, put your listening ears on, whatever you need to do to focus. And I'm going to toss it over to Brad and let him take the reins here.
Let's go. So I'm excited because for me, this is something I wish I would have been able to get more from people I was listening to, mentors that I had in the space and things like that, is defining what it's like to truly have a trading plan, understand exit points in the marketplace, and then also entry points in the marketplace. Because if you don't, it's like Mike just said, it's going to be a frustrating process. But I also feel like it's important for everyone to kind of go through it because then it teaches you the mindset of how to do this for yourself. So one way or the other, you're going to learn, and but hopefully this helps speed up your process.
Hopefully you don't learn the hard way. We're trying to avoid that with this episode right here.
I'm going to share my screen with you guys, and you should see creating a trading plan.
We got you. We got you.
Okay, perfect. So let's jump into this because to me, this is totally crucial in understanding why you're doing this. So creating a trading plan. When I say trading plan, I mean having something written down. I would highly encourage you to write it down. And why are you getting into this in the first place? Why are you becoming a trader? Why are you investing in the crypto space? And you can put this into stocks or whatever else, even real estate portfolios, however you want to talk about it. But what is my investment plan? You can call it an investment plan if you want to, instead of a trading plan. Okay. And so, but that's what we're going to jump into because it's so important to have a proper plan. Why do you need a plan? Well, you need to know what you're doing and why you're doing it. When I first got into crypto, I was like, ooh, coin, I want it, boom, and it was like, but why? What's the why behind it? Why is this a good cryptocurrency versus this one? Why am I buying it right now versus 6 months from now? Or, maybe I should have bought it a year ago. What's the timing? Why am I doing this? And so understanding that, you need to know what your own goals are. Okay. So a lot of people just go with whatever they hear. They don't even know what their own goals are. And so if you're following somebody else, they may have totally different goals or be in a completely different financial situation than you, and so it's important to know what your goals are. Everyone has a different goal. Everyone's in a different financial place, and so my goal or Mike's goal might be completely different than your goal. So you need to know where you're at financially right now, where you want to get to, and what you're willing to risk, which is the next point. Someone else's risk might be totally different than your risk. So not just the goal, like where you want the money to go, because like if I say, I want to hold Bitcoin to, $250,000, I might be able to handle the ride of that market differently than you. And so understanding that is important. Okay. And we'll talk about that. So understanding what you're willing to risk versus what, people on the internet are saying, right?
Sure.
Like right now I'm just a voice on the internet, right? And so it's like, understand what makes it work for you, what makes this successful for you. And then if you have a plan, you can execute when the time comes. Okay. And that's important. The when the time comes, being able to execute, so whether or not that is, understanding when to enter, understanding when to exit. But if you don't have a plan, guess what? You're not going to execute. So you may be in a position and it's time to get out, but you didn't know because you don't have a plan. Or you may miss the perfect entry because you didn't have a plan. And so that's why it's important. Okay, guys?
Yeah,
So
if you're going to let
reasons, need to have a plan.
You're going to let emotions, turn if you let your emotions guide you in this, it's not going to go well. Because it can be a lot of fun as it goes up, and you're not going to get out, and then it hurts. Right?
For sure.
So yeah, my pastor, I could actually put this in here because this applies. But he had a pastor: don't feel your way into an action, act your way into a feeling. Right? So that's really key here.
Yeah, because when your accounts are going up, you get emotional. When your accounts are going down, you get emotional.
Mm-hmm.
And so you got to understand the importance of taking the emotions out and sticking to your plan, which takes us to understanding the market cycle.
Look at that.
And understanding how to get into positions.
I love this chart.
Okay, so we bring this chart up all the time, guys, but I will continue to bring it up because it's that important to drill into our brains. Okay, so this shows you the emotional cycle of a market, and really it also just shows you how markets work in general. So
and this is called the Wall Street cheat sheet. If you want to look this up, you can Google this image and find it. So if you're just listening and can't see the video.
Yes, yeah. If you're listening and can't see it, Google Wall Street cheat sheet. This image will pop up. But basically, what this image shows you is a candlestick chart of price as it goes up and down. And I even love the fact that they like color code the candles based off of like people's emotions, right?
Right.
And so it goes through the process of how a market's price moves. So typically a market is going to start off at whatever price point it's at. It's going to move up or down in one direction, and it's going to work its way through a cycle. It does this because markets are manipulated. Supply and demand is how the price is determined. So the price of something is determined by how many people are buying and how many people are selling. Right. And so that's what creates these candles on a chart. So, a lot of people are like scared of technical analysis. It's really not that difficult when you break it down to just simply, hey, this is the supply and demand of the market right now, and understanding that. And so, but when we look at this chart, you can see, well, what would be the ideal time to buy? Well, when it's at the bottom, and you hear people say all the time, buy at the bottom, sell at the top, but very few people are successful at doing that. And the reason that very few people are successful at doing that is because they get caught up in the emotions that are written on this chart. And so most people, will not buy when the market's down because they're scared it's going to continue to go down. Most people will not sell at the top because they believe that they are a genius, that it's been this ride of being able to like sit there on their phone and watch their account just like skyrocket to the moon. And they think that there's no way that this is going to end. It's going to ride forever. I'm, an absolute genius. And at the end of the day, they miss it when it starts to show that correction phase. So, I show this chart, I show it all the time, but at the end of the day, it's understanding this chart and being able to compare it to true technical analysis on the real charts of whatever it is that you're trading, whether that's Bitcoin or Ethereum or any other, cryptocurrency, stock market, whatever. Being able to understand where we're at and understand the emotion and also the price action of the marketplace. So Warren Buffett famously said, buy the fear, sell the greed. And that's exactly what you're looking to do, guys. You're looking to get in the market when things are scary and get out of the market when things don't, or when everybody thinks that, it's going to the moon, right? So, perfect example. If you were buying Bitcoin in 2020, kudos to you. You did an awesome job. And especially if you sold it sometime in either the spring of 2021 or in the fall of 2021, you made out really, really well. And so understanding these markets is understanding this flow. Okay.
Mm-hmm.
So next up is, okay, now it's time to buy. How do I do it? What am I doing? Okay. So let's say you understand the chart that we just went through and you say, okay, if I'm looking at a chart and I'm understanding where price has been in the past, like right now, we're currently in a bear market. It is, what's today? We're in, July, August of 2022, right? Summer 2022. So I've been getting hit up a lot because at this particular time, we're seeing that, Bitcoin has gone from all-time highs of 68,000 down into the 20s. And so I'm getting, messages of, hey, is it time to buy Bitcoin? Is it time to buy? Is it time to get into crypto? And so, people are aware, that we may be at a low point. So people are starting to ask. So if you get to a point where that, okay, we're at a position that it's time to start looking at getting into the market, there's different ways that you can do it. Okay. So you can find price levels that you want to scale in at. You can dollar cost average, and you can just throw in a lump sum of money. Okay. So I want to break down what those three different things mean to me. Yeah. All right. Because it might mean something different to somebody else. Somebody might say scaling in at price levels and dollar cost averaging is the same thing. Essentially, yes, it is the same thing, but I look at it two totally different ways. Okay. So the way I look at dollar cost averaging is, I don't care what the price is, I'm going to buy. Okay. So, you can set up on an exchange an automatic purchase of Bitcoin. And I have a guy that I know that is actually famously known for being the first person that ever bought real estate with Bitcoin in the United States. And he famously goes around and says, buy Bitcoin, buy Bitcoin, buy Bitcoin. And he sets it up as, hey, whatever you can invest, let's say you get paid every Friday, take, whatever percentage you want to and buy Bitcoin with it and just put it on an auto thing. So every time your paycheck hits, boom, your bank account is sending the money over to your crypto exchange to buy that amount of cryptocurrency. If you have that plan for the long term, you are going to win. Okay. So let's say you're buying every week $100 worth of Bitcoin for indefinite time. You've been what's considered dollar cost averaging, because now you are getting a average price point spread out across the whole market. So when Bitcoin makes a move up to, let's say, $100,000, and maybe you got into Bitcoin when it was at $68,000, but you've been dollar cost averaging this whole time, your average price point is going to be an average between 68,000 and however low we go in this cycle, which at the low so far of this cycle, I think we hit like just under 18,000.
Yeah, some exchanges like
so 17. You would have a dollar cost average position of that. Okay, as a whole, because you've been buying it every single week.
Yep.
That is a very easy way to go about it, not have to think about it. Just know, hey, I'm in this for the long term. I don't care what the price is today. This is like my savings account. I'm just sending this money over there, and I'm dollar cost averaging it all the time.
Yep.
That's one way to do it.
Yep.
Another way to do it is to just throw in your money, so just throw in a lump sum. And you can say, okay, like Bitcoin's at 20,000. I want to buy a whole Bitcoin, or I want to get, a quarter of a Bitcoin or whatever it is, right?
Right.
You just throw it in. You say, okay, I've got $5,000 to invest. Boom, I'm throwing it all in. Okay. And so depending on where the market is, awesome. You just bought $5,000 or $10,000 or $20,000 at that price point. Now, if you're going to do that, you better be okay with the fact that it can go down, but it can also go up.
Right.
And if you caught it at the very bottom of a move, congratulations to you. But it's very, very difficult to time the market and get that perfect entry. So that is why, for me, the way that I like to approach when and how to buy is through scaling in at a price level. So let's say on my technical analysis, I see that there's a zone that I feel like price can go to. So what I prefer to do is scale in at price levels. So let's say I have this certain chart or spot on a chart that I feel like price will come into, right? So let's say I'm looking at the chart and we'll just use Bitcoin, for example. And let's say I think, okay, it can come down between, $20,000 and potentially the low I think it could get to is $10,000. And I want to invest X amount of money into the crypto space over the next year. I start positioning myself at different price levels. Okay. So you can set orders at those price targets on your exchange. If you want to just take the whole amount of money, stick it into the exchange, and then allow it to take your entries as time goes. So let's say, you want to put in an order and you say, hey, I want to buy, a quarter of a Bitcoin at, $18,000. Then I want to buy another quarter of a Bitcoin at $15,000. And, you can scale it down, right? Or you can make it, a larger percentage of your money at different price points. And so however you want to do it, right?
Yeah.
But that's the approach I like to take is I scale in. Okay. And then that allows me to have money on the sidelines for when price comes to different price levels. So then I can still purchase versus if I were to just throw it all in at one level.
Right.
I used to just throw it in at different levels because I just wanted my money to be in the market. I was ready and I was anxious. Right. But I've learned over time, the best way to do it is to scale into positions. That way you still have money on the sideline where you can participate if things continue to come down lower into a zone. Okay. And then that way, as it rides up, you can also scale out. Okay.
Yeah.
So knowing when to sell. All right. So scaling out of positions. There's, again, ways to do this. You can scale out of positions, which is basically exactly the same thing as I just said for scaling into a position. You scale out. So let's say I think, price target for Bitcoin in the next cycle is 120,000. And guys, I'm just throwing numbers out. So please don't use these as where I'm going to think Bitcoin is going to go in the future. I literally am just throwing out a number, right? Because that's basically double, a little less than double of its, recent high.
Yeah.
Okay. Personally, I think Bitcoin's going way higher than 120,000 in time, but let's just use this for an example. So if you scale in between 20,000 and 10,000, you could say, okay, I have an idea that Bitcoin might get to 120. So you could start potentially scaling out at 85,000.
Right.
Or at when it reaches its all-time high again, 68,000.
Yeah.
Whatever makes the most sense for you. And we'll get into that in a second, right? So you can scale in and out based on having predetermined prices that you're okay with. Another way to look at how to scale out is by percentage gain. Okay. So maybe you have gone up 25%. Maybe your targets are, I want to get 50% on my money. I want to get 100%. I want to see 2X. I want to see whatever, understanding that about who you are and how you're willing to invest will allow you to set targets for yourself on how to scale out of positions. And then personally, I would say you need to have technical analysis targets. And so for me, I combined all three of those
Yeah.
for how I scale out of positions. Okay. So for me, I do technical analysis. I understand where potential price targets are because of the technical analysis. All right. And then, so it's like, okay, if I can see a chart and it's been at these different levels and I understand those levels and I understand that last cycle it did this percentage gain or this kind of, retracement to this type of expansion in price, I will use that to help me determine price targets. And then I will set my scale outs based off of that. Okay. And then you can use percentage gains to help secure your investments as well. Okay. So that's a way to look at it. Now, to really dive into what you need to do personally for scaling out of positions and securing your investment. And I put securing your investment at the bottom. I'm going to actually bring that up because when you put money in the market, it's good to secure that money as quickly as you can. Okay. And so depending on what your goal is, again, you have to know what your goal is. So you have to know what your risk tolerance is. So, but to secure your investment, you can cover your investment by taking out your initial position. Some little baby hands starting to show up on the screen. So you can scale out based on what your investment was that you put in, right? But you got to know your own personal risk tolerance. Don't use my risk tolerance. Don't use Mike's risk tolerance. Don't use some other, crypto guru's risk tolerance on, YouTube. Use your own personal risk tolerance, right? So are you willing to hold during a volatile time? Like, are you willing to just hold on to your investment and know that, okay, like 3-5 years from now, I'm golden. I don't care.
Yeah.
If you are, awesome. But you have to know that about yourself. Okay. So can you handle a 25%, 50%, 80% decrease in your portfolio? Or is that going to totally freak you out? Okay. If that's going to totally freak you out, you should probably have a more conservative approach or a different style of approach, right? To exiting. You shouldn't be one of these crypto people that's like, I'm a hodler, I'll hold forever, diamond hands to the end. Like, that's not going to be you. Okay. Like, you're going to want to be one of these people that, like, yes, you believe in crypto, but you're going to exit your positions when you've hit certain areas of gains, right? Are you a person that is going to be happy with a 25% gain in crypto or 40% gain in crypto? I mean, we hear all the time in crypto of like things going 10x, everyone wants to see 10x. Everyone wants to see that 100x crypto. Right. What's going to be the next 100x, but like a 25% gain is a freaking 25% gain.
It's amazing.
And I would say before I got involved in crypto, I thought 25% gain would be absolutely incredible. So it's like, why am all of a sudden am I greedy?
Yeah.
Right. And so crypto makes people greedy. And so understanding, this aspect of your risk is really important. Okay. So are you happy with those kind of gains, or are you wanting to see those big numbers? Right. And if you are wanting to see those big numbers, are you invested in things that can actually get you those big numbers?
Yeah.
Right.
Yeah.
So understanding that. Okay. So when you start to scale out of positions, there's a couple of things that you can think about. All right. One, as the market starts to go up, scale out of your initial investment. So let's say you've decided where you're at, what your risk tolerance is going to be, and where you're going to be. So you've decided that once your money doubles, so let's say your $1,000 is $2,000, you're going to take out your initial investment. You've secured your initial investment. Now you're only playing with house money or your profits, right? All right. So now you've got $1,000 that's still in the market. All right. Price is already doubled. Now where are you going to pull out next? Okay. Let's say you want to see it, go up 75% more. All right. Perfect. You know that it's in your head. It's on your written plan. All right. you take your money out at that next position,
Right.
and maybe it's a percentage, right? Or you say, okay, any position I have that goes up 25%, I'm going to scale out of. And then, when it hits 100%, I'm going to take out my initial investment. And then when it hits 200%, I'm completely out of the market. So you get a 2x, boom, you're happy. Good. You secured your investment and you got a 2x on your profits. Okay. So, that works for you. Everyone has a different plan. So you need to create a plan based on your willingness to be in the market and your willingness to handle the volatility. A lot of people will completely miss everything because they don't ever take profits. And one of the things that, especially as I got more involved in day trading, is I actually, with my day trading, have a habit of taking my profits early. I miss out on larger portions of moves because in my day trading, I take profits fast. I secure my position fast because in day trading, it can go, either way. So day trading is different than building for your portfolio,
Right.
but, understand it's a mentality of what am I willing to put on the table? What am I willing to watch move around? And when do I feel good about the fact that I got out? Okay. So here's the deal. Let's say you're scaling in to crypto right now. And I wouldn't fault you if you wanted to scale in right now. I mean, $20,000 Bitcoin a year and a half ago, I didn't know if we'd see a $20,000 Bitcoin again. So you're scaling in right now. Awesome. You're investing, you're getting in the game. Okay. So let's say you're scaling in for the next 6 months or so, and Bitcoin starts to move up in 2023, and it's past your level of scaling in. Stop scaling in. Stop scaling in. Okay. And then let yourself get to these all-time highs. A lot of people get into crypto once it hits the all-time highs again. So it's like a lot of people started buying crypto in 2021 or at the end of 2020 after Bitcoin had already gone from $3,800 up to 19,000 when it touched its all-time high again. That's when the masses of retail people started putting money in.
Yeah,
right?
I mean, I've got an example of that just from myself. My very first crypto I ever bought was wrong on so many levels because the very first thing I ever bought, guys, was Dogecoin. Okay. Why did I buy it? Because everybody was talking about it, and Elon Musk was going on Saturday Night Live, and all of crypto was at its all-time high. And I'm like, oh, what better time to get in than now? Boy, was I wrong, because I didn't know any of this stuff. That if you guys have been listening for the past 12 episodes or even just the past 2, you have learned more information than I had when I got in, right? And so what did I do? I bought literally to the cent at its highest point. I put in $100 and wrote it all the way down, and it
At
hurt.
least it was just $100.
I know, right? It hurt me mentally, like, more than it hurt financially, because it is so emotional. It's like, oh, great, this is how I get in. This is my first initial investment, wonderful, right? That's why there's firsthand experience why this stuff is just so important. So important. So.
Yep. So yeah, absolutely. And it's this way for everything, right? So stock market, crypto, NFTs, for me, like that's my focus is crypto and NFTs to a certain extent. But what I would say is to know what you want to invest in. That's another thing that you need to put in your plan. Okay.
Yeah, I mean, I knew nothing about Dogecoin, and here I am tossing a lump sum of $100 at it. I didn't know. I didn't necessarily choose what price level I wanted to get in at. I didn't know where I was getting out at. I didn't even know really what Dogecoin even was. Had I known, I would have never tossed $100 at it. So
yeah. So I mean, that goes back to the first part of this presentation, or the first part of this trading plan position deal, was know what you want to buy. Right. And so it's like, right now, I would say if you're getting involved in crypto, now is the time to buy. Summer of 2022, now is the time to be buying the big stuff,
Yeah.
you know, the main stage coins. Like you don't want to be getting like the things that say, oh, this can 1,000x, you know, type of thing. Like now's not the time for that. You'll have plenty of time for those types of things later.
Right.
But get into positions that are quality investment choices that are going to be here for the long haul, that are setting the stage for what cryptocurrency is and what it is becoming,
Right.
and the use cases that are there, and you'll be good, you know.
Yep.
And so, you know that these things work in cycles. Know that based on, you know, the watching of this video, whether you're watching this today or you're watching this 3 years from now, there's cycles, you know, that play through that, you know, these cycles right here,
Yep.
you know where we're at, you know. So if you're watching this video in the summer of 2024, we're going to be in a totally different position than we are right now. And I can't wait to go back and watch some of our videos, you know, 2-3 years from now,
Yeah.
and see like some of these things that we're talking about now, where we're at as a market and where we're going to be, you know, then.
Yeah.
So, but
Yeah.
guys, understand this stuff. It's really important to know why you're getting into things, you know, and so know why you're getting in, know when to get in, when to get out, and stick with it. You know, that's something that is really important to me. You know, I write down in my little notepad, you know, the stuff that I believe in, what I want to do, things of that nature. And so if you have your price target set, you just make your decision when it happens, you know, set your alerts to let you know that, hey, prices hit these levels, boom, go sell it. Don't hang on to it and miss out on the gains that you've made. No one in this world has gone broke by taking profits, but a lot of people have gone broke by just letting things ride.
Yep.
And so, you know, you take your profits, be happy with your profits. Let's say you take your profits, let's say Bitcoin runs to, well, let's use a perfect example. People wanted Bitcoin to go to 100,000 in this last cycle. Well, the people that took profits at 68,000 are probably pretty happy that they took profits at 68,000, right? And so it's like, would those people be disappointed that they didn't get out at 100,000? Yeah, they probably wish that they left some aside, you know, but at the same time, they're really happy that they took profits and they're not having to ride a 2-year cycle waiting for that price action to jump back up again.
Right.
So
right.
Always be okay with taking your profits when you hit your price targets, guys. So
Yeah.
that is today. That is building a trading plan. You guys knocked that out, set it up correctly. Do it for yourself, do it for your family, do it for your future. Your future self will thank you for it. So build a trading plan.
100%, Brad. That was fantastic. So valuable. So many gold nuggets in there, guys, for those of you either just getting in or maybe you got in like I did and just, you know, threw something at it and it didn't stick. And you didn't get anything out of it because you didn't have a plan before going in. You know, one of my other mentors has, you know, a quote that he says, do you have the power to let power go? Right? Let the system do its job. And that's the system you create, right? And really, if you think about that quote, like you are creating the power by following your system, right? And you're not letting the system have the power over you. And those emotions have the power over you because you have a plan going into it. You know, it's 100% key. So good stuff. Appreciate your time today, Brad, and your knowledge. You've been trading for a long time, so this comes from a history of trading, and super powerful stuff. So next week we have our day 4, and since we've kind of given you quite a bit in the first day, second day, third day now, on day 4 we're going to give you some tools to use to kind of put all of this into action, right? You're ready to go. You've got your ledger ready if you picked that. You've got your hot wallets, your cold wallets. You've got your exchange chosen. If you've written down your plan, you've kind of done a little bit of research, using your tokenomics to kind of choose a couple of projects that you want to invest in. Now we're going to give you some other tools to kind of look at exchanges in a different way, look at the markets in a different way, and some tools to do some technical analysis on, and just some places to go to get information to help you make sound decisions, right? And then help you keep track of it. So exciting stuff coming up in day 4. We hope you guys tune in. We hope you guys are always getting value out of this. If you are, like and subscribe, hit that thumbs up button, share it with somebody, give us a review, whatever you want to do there. We'd appreciate it.
Tell us what you want to hear about next.
Yeah, or just shoot us a message. Leave us a comment on the videos, or in Spotify or something like that. Just let us know. We'd love to know what you guys want to hear about, but we could talk about this for days. So we appreciate you guys tuning in, and as always, have a great week ahead, and we thank you guys, and we will catch you on the next episode.
That's it. Make it a great day. Y'all have a good one.